Good morning, everybody. Welcome to the Flow Show. We're at the end of another week, Friday the 30th of January, end of another month, into the first month of the new year, flying by pretty quickly, and a very important day, potentially. We finally find out who is going to chair the Fed after Powell, Mr. Trump, saying that he's going to drop the name this morning. So we'll all be on tenterhooks for that to see who's coming. Are you ready, Kay?
As ready as can be, Ryan. Good morning, everybody. Thank God it is Friday and the last day of the month indeed. And what a month it has been, finally. Yeah, we're ready. Yeah, we're ready. I guess we're going to know pretty soon. It could be that he straight away replaces Myron or Miran, whatever his name maybe spelled like. Straight away to fill his seat on the 1st of February?
Yep, could be. And the name that is in the frame is Kevin Warsh. There's been some bits and pieces out saying it's him that is getting the nod, apparently, according to sources' reports. He was at the White House on Thursday or yesterday, so those rumours are circulating around, and that's given the market a little bit of a shock in terms of they were expecting Rick Ryder to be favourite, and that's all flipped around again. So those betting markets, getting it wrong once again. Right, anyway, let's crack on with the rest of the news and data that have been out and about today and overnight. Starting off in Japan. If we've got this on this calendar, I don't know. There we go. Tokyo CPI coming in softer. Headline CPI coming in at 1.5%, which was much lower than 1.7% expected, below the 2% in December. And that number obviously coming in below the Bank of Japan's target. A couple of the core measures, the ex-fresh food coming in at 2% from 2.3, ex-fresh food and energy 2.4 from 2.6. Not a huge move on this in terms of what it means for the Bank of Japan, because, as your reader has been saying, they expect inflation to drop under 2%, and they don't know how long it may stay there for before accelerating again. So to be expected. Still don't like to see it in black and white, but those are numbers. Anyway, we also had industrial production for the month coming in at minus 0.1%, year on year 2.6%. So that was a positive over the prior negative months for the year on year number, and small down for that one. Also a bit of retail sales numbers there from some of the larger retailers, which showed that in December they fell 2% on the month, and only up 2% on the year. Headline sales coming in down 0.9% in December, were expected to be a positive 0.7% from prior 1.1%. So a little bit of softness there. Did get some other news out from Japan as well. The Bank of Japan is keeping its bond buying plan unchanged for February. So no real news in that, but it could have indicated something if they decided to pick up their bond buying, but they're going the same as they were. And we've got the MOF intervention report for the last month between December and January. Oh, why's my squawk going? Hang on a second. Where's that gone? I've lost it. I thought I shut it up. There we go. Right, that's my squawk shut up. So yeah, the intervention report coming in at 0. So there was no intervention in the December-January month. A bit of data out from Australia as well. PPI data, quarterly numbers there. Coming in a little bit softer than expected, but still a positive year on year, unchanged over Q3. We've had more data out. It's CPI day in Europe, also GDP day. We're getting some of the flash numbers out as well. France, as you can see there, coming in quarter on quarter GDP at a whopping 0.2%. with Q4 year-on-year number posting at 1.1%. So still looking very anemic, that growth there. We've got Spanish CPI data out too, which was a little bit softer. The Eurozone measure coming in at 2.5 from 3% expected. The Spain CPI number 2.4 from 2.9%. Their GDP coming in, excuse me, coming in year on year at 2.6%, a bit softer than expected. Quarter on quarter 0.8%, a bit warmer than expected. Spain hasn't been doing all that badly of late. German unemployment change there, as you can see, not too much change. Unemployment rate staying unchanged at 6.3%, and there was no change in that, not a bod, rounded up to the nearest 1,000 people in that. We also got the regional CPI numbers out of Germany coming in a bit hotter than prior month. As you can see there, if you go down the list, Baden-Württemberg 2.1, 1.9, Bavaria 2.1 from 1.7, Brandenburg unchanged 2.2, Hesse was about the only outlier, 2.1 from 2.2, Saxony 2.3 from 1.9, and the big North Rhine-Westphalia number 2% versus 1.8. Italy GDP coming in better at 0.3% quarter on quarter, 0.8% year on year. I'll get through all that lot. We also had some UK data, mortgage approvals, missing expectations, 61,000. Though mortgage lending was up. Bank of England consumer credit was lower in December, 1.524 from a revised up 2.143 billion. So nothing much ado about that on those numbers there. Okay, a lot of data. Those CPI numbers, any worries for the ECB, do you think?
No, not at all. It looks to me like there's a bit of seasonality in there, because we had pretty a drop last month in those German numbers, if I recall correctly, and January just takes it back. So I think there's not a lot to read in there for the ECB. Yeah, you see, prior number was lower, right? So nah, I'm not going to read anything in those German numbers. European growth, as you say, anemic, but people seem to be already happy when I read the analyst that they are not in recession. Yeah, also there, not a lot to say really, can we? I think it's all going to be about what the reaction is on Warsh, which I think I'm not going to say buy the rumor, sell the fact on the dollar, but it could like just stabilize after a bit of a blip. We don't know how if it's him, that is. We don't really know how he has evolved. We know that he thinks they can lower rate at the same time reduce the Fed's balance sheet. Bit of an inflationary thing on the face of it, but yeah, and I don't know. I'm not buying the we need to have dollars when it's Warsh kind of thing. I mean, at least not just because of his nomination, right?
Yeah. And no surprises at Japan regarding that intervention report. Not even really a little algo blip on that move. So they've done the job. But if the dollar, I made this point in our chat room, if the dollar does shoot higher, if Warsh is confirmed, we'll see dollar yen rallying. It's not necessarily going to bring out the verbalists over in Japan unless the rest of the yen pairs are rallying as well.
Yeah, we have to see. Do you remember last time we were up like very close to 155? They found it necessary to do another rate check. So that's going to be the interesting level to watch, I guess. If we get up there on any further dollar advance.
Yeah, absolutely. Big level on the old chart. Right, let's move on. You can all jump for joy The EU's Callas says work continues on the 20th Russia sanctions package, because the other 19 have been so successful so far. They're working on another one. And one of those measures that have come through is that you would have thought this would have come sooner, but they've now listed Russia as a money launderer. Why they've waited 2019 sanctions packages to get to that point, who knows? But now they're officially a money launderer, according to the EU. We had a bit of data out the US yesterday, not a lot. We had initial jobless claims, which came in as it has been, around the 200k mark, not much move there. Trade balance was a little bit worse, with imports and exports all over the shop on that. These trade numbers are still flipping around quite a bit on everything that's going on with tariffs and whatnot. But that was a bit more negative than it was the month before. We've got factory orders out as well, which on the month posted a healthy 2.7%. This is for November data. Headline durables was unchanged, though the sort of the core investment component, capital goods orders on defence ex-air, came in a little bit softer at 0.4%. We did have a 7-year note sale in the US as well, which, if the Sell America trade is valid, these are things we're going to have to look at now. The bid to cover was lower, 2.45 versus 2.51, but the indirect take-up was better at 66.9% versus 59% previously. Now the indirects do contain foreign investors and the like, so there was no lack of appetite from that crew, even though the bid to cover was a little lower. What else have we got? So we're speaking about, already spoken about Kevin Warsh. So that is a name in the frame. So leaves a little bit of a shock for the market if it's not Warsh, because the market's leaning that way, as we've been saying, what the market does with it. For those that don't know, Warsh was a big hawk in the QE days, and then he turned into a big dove in the I might get a shot at the Fed chair days, i.e. now. So he's played both sides of the coin in recent history. He has been obviously within the Fed previously. Right, Trump's also spouting about everything, as you can imagine. He says it's very dangerous for the UK to do business with China, but he says it's more dangerous for Canada. This is on the back of Starmer being in China and being all pally with Mr. Xi. He also said he had a good meeting with Mexican President Sheinbaum. Herself said we had a productive and cordial conversation. We continue to make progress on trade issues and the bilateral relationship. We agreed that both teams will continue to work together. She said the US had asked her to increase the regional content in the USMCA, not just the automotive sector. So that part of the USMCA between US and Mexico is ticking along nicely. The US issued its latest, what we call the currency manipulators report, where they run them all over certain countries, and they've got a watch list of who might be manipulators. They haven't named anyone officially as manipulators, but the usual mob are on the list, including China, who they've said that they want China to allow the yuan to strengthen in a timely manner. They've been banging that drum pretty much through every currency report they issue on that. Otherwise, nothing else of note from there. It's possible we could avoid a shutdown. Trump posting that Republicans and Democrats are to fund most of the government until September. There is obviously this DHS stuff and a couple of other bits and pieces to be finalised, but it looks like we could avoid a shutdown, but never say never with these games. The Iran stuff. Iran issued a warning yesterday that it plans to run a drill next week that would include live firing in the Strait of Hormuz. So they bit of chest beating those guys and a bit of risk into next week. They have been doing the usual and playing hardball in terms of the threat from the US, but apparently now they're ready to engage in negotiations, although they want guarantees that they will not be attacked while negotiating. So Trump also confirming that talks may get underway. So we'll see whether that calms things down. And in the Russia-Ukraine situation, a Kremlin aide said that Ukraine guarantees have not been agreed with Russia. So still sticky points over there, as well as the territorial thing that's going on. Right, that's that as far as the news is concerned. Anything else to note, Kay?
No, I think you covered everything, everything and more, Ryan. But yes,
Good.
the RN stuff may be a bit of a risk factor over the weekend, right? Because of Trump's armada over the beautiful armada over there. Sorry, I forgot the word beautiful.
Yeah, got to include the word beautiful, definitely. Let's have. I've not even had a look myself. What's coming up this afternoon on the data front? If we've got anything at all, let's have a quick butchers PPI. That's about it. So that's for December numbers. Bit of monthly GDP data from Canada. Germany, the main German CPI numbers are coming out there. 2% expected. That might be there or thereabouts. Obviously, given those regional meetings, it might tick up a bit higher than that. But that's not really going to move markets. Oh, is there a bit more down there? I haven't clicked the button. Let's have a look. What else is coming up? Nothing. Right. So it's all going to be about Warsh. We've got a bit of a flip out in gold, or had a bit of a flip out in gold, precious metals, right? Everything, commodities are dumping at the moment. The lazy line is that it's all being blamed on Warsh, thus blamed on the dollar, etc. What's going on in the old metals, Kay? We're having a bit of a crap out.
Yeah, well, there was, as I said already on the shows yesterday, about gamma negative traders, which also can explain that very steep rally from 5,000 to 5,600. It's a bit of a naughty one when the market makers are in that kind of position, because the higher it goes, the more they need to buy until they are hedged. Then all of a sudden that demand drops away. But when the boat turns around, they have to sell it out again when they get below their strike. So I mean that's really seemingly what's been the play. Also, silver may have seen a bit of the same, because we did have a very sharp rally above 100 when it started. But I think silver, I mean, the most people in the market thought it was a bit of a done. But obviously, the speed of everything is making it a bit of a difficult read of what's going to happen next. I would say silver stopped somewhere around where it had to, anywhere between 93 and 96. And it bounces a bit, trading around 100. We could stabilize into the weekend. But then again, there's a bit of weekend risk, I think. And also we have to see how the market reacts, because apparently when Trump said that he would announce it and the market thought it was washed, people started to sell metals again. I'm not sure if it's really warranted. But again, but I think it's for gold, it's going to be relatively simple. It stopped right around, right below 4,000, where I have my first support. But yeah, it's the 5,000 line. Whether we close the week, or perhaps better open next week. That could be indicative of what's to come further for the metals, right? So we are at the levels. Okay, we are $80 above in gold already, which is in normal times a move. But I think, yeah, the 5,000 mark, the 100 mark. Let's see how we start next week.
Yeah. If everyone wants a dip to buy when it's up here, but then you get moves like that, and no one wants to touch it again. This is the thing with trading. It's trading is difficult at the best of times, and when you get markets moving massively like this, you know, it's easy to try and get sucked in thinking, oh, there's big ticks available here. I want to grab some of that, but sometimes it just becomes too dangerous. This volatility, so you have to be careful. As I say, let the levels develop. It'd be interesting if we do start banging our head on this 51.10 area. That will indicate maybe we've turned into a bit more of a rally selling mode, Kay.
Stabilizing mode, I would say it's actually quite okay. We went a little bit below but I do have the 49.40 in there as a bit of a fib, but we could just stabilize in that range, right? That's about $150, right? With the volatility that we see these days, yeah, maybe we just stabilize there until the weekend, maybe. And you said, like, yeah, it's easy to buy the dip if your broker permits, because I'm still discussing with them about what happened yesterday. It went so volatile that they closed the taps on trading for a while. So that's the other one. You can do a trade, even a good trade, but just make sure that your broker allows you to get out of it, and that may be another problem. But no. I think the overall picture, the global picture, for me, the fundamentals have not really changed, and unless the whole geopolitical situation gets solved, which is far from a done thing, right? Because there's just too much going on and too big problems to be solved. And then I don't know, or unless the debasement or whatever people want to call it, trade comes to a bit of an end, and we are going to see more downside in the metals as well. But unless all of those things get solved or wane, I think the fundamentals are still pointing for it to at least remain bid somewhere.
Yeah, and so, some of this precious metal move could be on the risk play. Said Iran, US maybe moving to talking rather than lobbing stuff at each other. We've seen oil down a bit as well, not a huge amount, but it's reacted. We've stopped shooting up, that sort of thing. So that could be playing in gold as well.
And then we had some strange correlations. Well, strange, some correlations coming back to the fore, which maybe not as clear. But yesterday, the tech moves in equity markets, then the metals, then this, then that. It was like, get me out of here kind of moves, right? So but maybe I think just maybe even if the fundamentals are still there, and maybe the moves will calm just that little bit, because we are back at those levels, which in current context may be seen as a bit more reasonable. Although now we are starting to move to the other side again. We're back above 5,100 in gold.
Yeah, exactly. And also got in the month in the mix as always, which is not suggested to be a big one, but still people might have stuff to do in things. So as far as this Fed stuff, Fred, there's no time. It's whenever Trump decides he wants to start tweeting from the toilet. So we've already had the reaction that the market has bought dollars on the back of it. We're also seeing yields coming down a little bit, not huge moves in the grand scheme of things. So that'll be something to keep an eye on as well. I think this is probably moving a bit more on the risk picture than the Warsh picture at the moment, but we'll have to wait and see if it's him and what he does with it. We've got something interesting going on in euro dollar. We're turning pretty close to this 119 area. We've got a big expiry today, 6 billion going off at the figure there. So keep an eye on that. If this war stuff, Fed stuff brings a big dollar move, then everyone will forget about the expiries. But I think if you're looking at a wider picture, this 119 is looking a bit interesting, because this whole rally, if we're closing above 119 and this break, it's really going to cement the break. As usual, probably take it down to 1890, 1880s. So if we're holding here, then it's going to keep this break alive and potentially give it the momentum to go and push on to further heights. If we don't finish above this 119, if we're back in this box, then we might have seen a bit of an extreme move, shall we say, a bit of pressure blow off, and then we're back in the range again. So this is all, I think, one of those days where we close today is going to be vitally important as to what happens next for the euro. Just one other one I'll look at quickly. Dollar MEX. We're doing a little bit of ping pong, or we're trying to do a little bit of ping pong. 17.05 is the big downside level. Obviously, still got this 17.40 that we've broken and have been holding. So that's stabilised a little bit. Again, what's going on with Mexico, USMCA, dollar, Warsh, all the crap and commodities and whatnot. So we're in a bit of a potential range play here. We'll see if that continues. You got to watch out for little extensions sometimes above these levels, you know, like we saw at the 1850, where you just get a few of these extensions, but it doesn't hold for long. So it's possible it might do this either side. But if we get a full resolution of this range, whether it's building back above 1740s or breaking under 17 and holding it, then we could get a bit of direction from that one. You want to look at Aussie dollar, Mike. Get long below 7. Well, we're below 7. So you want to get long? We're below 7, mate. This one, like a lot of pairs at the moment, same thing as euro dollar. You know, you've got this key level at 7,000. Okay, I think you need to be wary about where we close the week off. If we're closing below this 7k level, then maybe, you know, we're going to undo a bit of this rally. I mean, this is not really in danger. You could say 69 and even 68s.
The level is right below there, 69, 60, 65. Huh? It's
yeah, you see that
that's the magic. That's the magic level for me. I've been highlighting this the whole week, and that's really the magic level, whether we are above or below to close the week or open next week. It's always like it's end of month as well. And sorry to interrupt, Ryan, but it's end of month as well. I tend to say that on a normal weekend, I would say, yeah, it's important where we close the week, but it's going to be equally important when we open next week, right?
Yeah, exactly that. And if we blow that 60, below 69, then maybe the wheels are going to come off a bit on that one. So, yeah, I mean, Mike, it depends what you want to do, mate. It's a Friday. You know, there's the support, as Kay's pointed out, shown by the fib there, 50 retracement. If you want to try somewhere, that looks a good place to do it. If you're wrong, you don't have to be wrong by much to get a fly. But, you know, maybe timing's probably the biggest constraint for you rather than levels. Aussie Kiwi, I'm still a little bit long this one, and I'm thinking about chucking it out ahead of the RBA because we do have the market heavily expecting a hike. So there's little more to price in that side, and the fact that the Aussie is weakening a little bit, both here and versus the US dollar, suggests that if they don't hike, we're going to see a very sharp move down. And I'm still not convinced they hike, Kay. I know you're sort of in the same boat, so I'm thinking about jumping out of this one perhaps today and picking up the pieces after the RBA.
I've let the mind go, mate. I mean, I'm extremely. I must say, I'm very disappointed in this Aussie Kiwi move. I know that longer run we have been rallying quite a bit, and yeah, I mean, managing the books. But I'm quite disappointed because I really thought ahead of the RBA that we would play the interest rate divergence and find Aussie Kiwi closer to 118 than 115. And yeah, so I'm really disappointed with this move. It's also, I've noted, risk off. It doesn't play well, doesn't sit well with Aussie Kiwi, and higher dollar doesn't sit well with Aussie Kiwi, which is very strange because if you look at euro and cable, for instance, when the dollar is bid, cable tends to go a little faster, and in Aussie and Kiwi hasn't done it at all on the past in the past sessions. rather Aussie Kiwi went down on on a slightly less good risk picture and a higher dollar. So I'm let's say not confused, but very disappointed that we're not much higher. So I let mine go.
Yeah, yeah. I mean, I can see it because obviously we've got the RBNZ in pause. They've stepped into neutral. CPI's picked up. The economy's started to pick up. So a lot of this move might be done as far as that's concerned because unless the RBNZ are going to be turned into cut mode again, this has got a chance of undoing just on the rate divergence. But obviously, if the RBA do start hiking and hiking aggressively, then that will change. But yeah, I just can't see a situation unless inflation really heats up and the economy really heats up where they go on a 2-3 hike spree
Mm.
in this one. So yeah, I don't know. I'm long. Okay, so I'm going to get out the trade. I might even start thinking about shorts
Mm.
if they don't hike. If they don't
Oh,
hike
if they don't.
but talk hawkish, I think I'll short that.
Mm. The thing is, I was just looking at the pricing. It's obviously later than the RBA, but for the end of the year, they're pricing 100 BPs hike or expecting 100 BPs hike in the RBNZ.
Yeah, let me see. I
Or
don't know if they've got
oh no,
the
it's
RBNZ on this
maybe
one.
early. No, it's for 2027. But still, there's this a half
Yeah,
a
there you go.
percent until December. Oh,
Yeah,
okay. Yeah, I know RBNZ is a central bank that can change tack relatively quickly, but with ore gone, it may have quieted down a bit. But yeah, perhaps they are going to be a bit more dynamic, and that's why we are seeing the hesitation, let's say, on the Aussie Kiwi.
yeah, absolutely agree with that. Right, I'm going to pass it over to you, mate.
Yeah, I don't have an extremely an awful lot to show. Just quickly, because you showed the Aussie, the Kiwi has been quite a bit more resilient indeed. But I need to go on maybe zoom in a little bit because where Aussie has corrected a bit more, we are still in the Kiwi comfortably above 60, so a bit further away from the psychological level and also where the prior top was in September. So we're still a distance away from 60, which is of course going to be a big marker. And I'm especially thinking if the market wants to react to Warsh, maybe that's going to be a level that the market will be looking at. And if the market is still looking positively towards the Kiwi, that we could see bids creeping in just like we did here on a setback just above the figure. Keep that maybe in mind. Cable was an interesting one. I would have thought the prior high here, 137 and a quarter. That's exactly where we stopped today. So that's really your first level to watch there. There's a few more levels. Again, if the market wants to react, this is an interesting one around here, around 136.70, if it would go lower. But I still think that for as long as we are above this line here, coupled with this level here, which is low 136s, for as long as we are above low 136s, I am not going to look for a reversal. I was long. I've let mine go just because of the price action, just because also I actually left a pretty tight stop on the rest of my longs trading stop overnight, and I got done below this the prior high. That's going to be another interesting one, whether we close above or below or open next week above below. Because if we do above, then I think over time, I don't know how long it's going to last, but the attraction of 140, the magnetism of 140 could be 140, sorry, could be upon us in the cable, which is interesting. As Ryan yesterday highlighted, we found no, yesterday, not the day before even, right? We're finding bids again in this, or yesterday on Face maybe. We're finding bids again in the euro sterling. I thought it should have had it should have stayed above already the 65.79. We went a little bit below, but the prior low is holding up again. I was thinking that we may see a move like this, the one that we had early October. It looked a little bit the same, coming down and then trying, and then going higher. It may just do with some delay, but it has a bit of a similar feel to this move. Of course, if it goes below 86.45, I think we need to be a bit careful with maybe even euro dollar could be one that we need to be careful with if the crosses are heavy on the euro crosses. Okay. Oh, you already spoke about the dollar mix. I actually do have this zone marked exactly that zone on the dollar mix. So we completely agree, Ryan, on the levels. The interesting one here, and no, that's not the one that I want to show, is the dollar Norwegian kroner, and it's a long-term chart. Okay, it's a weekly chart, but we are in a quite important zone, in my opinion, and that stretches from 940 up to 965. Um, I think it's quite important what's happening around here, and you look at this here, the 61.8 comes in there as well around 945, and again, Iran. What's going to happen to Brent is probably going to be a driver for the start of next week. Maybe a little bit of weekend risk in there, as I said. So this is going to be an interesting one on Norwegian kroner, and this is one that's really on my radar for potential trade next week. But I'm going to go with the flow. I'm not really. I think it should still be a rally seller, but if the whole situation dies out in the Middle East, which is a big ask, we could easily lose a couple of bucks in Brent and this trade a bit higher again. So I'm going to keep a close eye on this one for next week. And yeah, Ryan already showed those metals. I had a bit of a line here, stopped right there around 49.45. There's more levels down here. 5100 as Ryan showed. I don't have it on my picture, but it's actually right here. And then I think this every 50 to 100 bucks higher, and this zone especially, which is between 52.80 and 53.10.20. That's going to be, I think, an important one to see where we either close or reopen next week. Because if ever we are back above there, I think this big retracement, for whatever reason it happened, may be over, but I do think it's going to go slower. Okay, that's just my view. I think moves will. I don't think we are going to see 500-600 bucks again in a day. But of course, famous last words. You're looking to get long Kiwi under 60.30. Well, yeah, I think the stop is clear. 60 is your magic number, right, on the Kiwi, Mike. Ryan, back over to you, mate. Have a very, very good end of the week and the month, everybody.
Thank you very much, mate. Good stuff as always this week. And yeah, that's it from the Flow Show for this week. And take care later on. We don't know what time this Warsh thing's dropping, so stand by your beds. Get ready for some volatility. Have a great weekend, everybody, and we'll see you all next week.